All right, back to work. Break time's over. I don't care how much money you made today. Tomorrow, all the chips go back to the center. The game starts over again. And the way these charts look tonight, we better have a game plan to make some money, not give it back here tomorrow. It's Tuesday evening already, 10th day of May, 2022. My name is Joseph, and as always, welcome back to your nightly newsletter. Now, if you're watching for the first time tonight, it is great to have you with me. My job tonight is to help us find the best trades, setting up for Wednesday's trading session. I got a great video for you guys tonight. Charts are all ready in the background, as you can see. We got the oil, got the Nasdaq, and we got the S&P locked and loaded for tomorrow. We have a lot on our roadmap for tomorrow. Got a lot of good trades setting up here. A bunch of ranges here today. Range on the Emini, range on the Nasdaq, little range there on the crude oil. You know me, I love ranges, right? Buying low, selling high, fading breakouts, trading breakouts. Not to worry, I'm going to cover all my favorite trades in tonight's video. That way you have a roadmap for the buried treasure tomorrow. Make some money on Wacky Wednesday. Before we jump in, though, got a lot we're going to cover in this video tonight. Before we jump in and get our party going here tonight, make sure you subscribe to the YouTube channel. You know, I publish my best trade ideas every evening on this video. I don't want you to miss tomorrow night's video, so make sure you subscribe, hit that bell icon, set those notifications. That way you always get notified every time we publish something new. How about questions? Questions for me. Drop those questions in the comment section. I do go back and answer all the questions myself, so don't be shy in the comment section below the video. And as always, I appreciate you guys tuning in tonight, especially after a big day like today. If you enjoyed this video as much as I enjoy making it, do me a favor, hit that like button for me. Appreciate you guys carving some time out, supporting this YouTube channel. But enough of the intro. Let's get ready for Wednesday. Get some big news coming our way tomorrow. And like I said earlier, right, we got to make sure we get ready for tomorrow, because I know a lot of you guys made some really good gains in your accounts today. We had a pretty good plan of attack that worked out pretty well from last night's video. And tomorrow is a day where if you are not prepared mentally, technically, you're going to give a good chunk of those gains back if you're not ready. So we're getting ready for tomorrow's trading session here. In tonight's video, lots of ranges, not just one range, right? But look at this. Do you see that? We got dualies everywhere here tonight, right? Range, two ranges on both of these markets right now. Now, a couple of these are an issue. One of them is not an issue. So we're going to talk a lot about this. How often do we see two ranges in each chart? Not very often. Not very often. So we definitely have we have a lot to talk about here tonight, because the S&P and the Nasdaq, they're a little bit different than the oil. I'm going to go over all my. Again, well, I'll give you a good roadmap here tonight so you're ready for tomorrow. But lots of ranges. We're fading breakouts, buying low, selling high, trading rotation. Ooh, I'm excited. If tomorrow is half as good as today was, we'll be very happy going to Thursday's trading session. Speaking of tomorrow, though, tomorrow is Wednesday. Wednesday. Let's get the schedule ready for tomorrow. Tomorrow is probably the biggest news day of the week. It really is. There's not a lot of news here this week. We got some big news tomorrow, though. Everybody's watching that CPI report tomorrow. Now, all of the experts, all of the high-paid, educational people, all the smart people out there, they seem to think we've peaked on the CPI, right? They seem to think the last few weeks last few months of 10% year over year. They seem to think we've peaked with our kind of height of the inflationary bump here. We're going to find out tomorrow. We're going to find out bright and early tomorrow. As you can imagine, if that number comes out more than expected tomorrow, I would imagine that to be a very dramatic reaction from these markets. Now remember, big news. Remember, news is noise. I'm not going to waste our time tonight by talking about, if it's higher or lower or what they're expecting. But I'm telling you right now, if this number comes out, if it shocks people, we're going to probably get a pretty good reaction. Your focus tomorrow is right on that reaction. Don't waste a second of your time tomorrow around that CPI report. Don't waste a second of time looking at what the number was. Just stay focused right on the chart. The chart will tell you how the market receives it, what the market thinks of it. The world is too complicated these days. The marks are too complicated to think that a big number, small number is the answer. So watch the reaction tomorrow. Don't worry about what the news is. If I had to guess, though, I would guess if that number comes out a little bit higher than they were expecting, I would imagine that sends people into a bit of a shock as far as this may not be the end of the road for rising inflation. But again, don't spend too much time tomorrow worrying about what the number is. Trade that reaction. And of course, tomorrow we'll be in our trade room front row for that CPI report. We'll be right there with you guys tomorrow in the trade room trading that reaction. We also, of course, have the petroleum status report, the weekly report tomorrow for oil traders. That is, of course, at 10:30 Eastern time. Be aware, I do like to use a 10-minute buffer. So 10:20 to 10:40, kind of bracket out that employment report or that oil report tomorrow morning. So be aware of that for oil. Remember, if there's one day out of the week where oil tends to be more difficult to trade, it's usually on a Wednesday. So get those trades early on a Wednesday or come back on Wednesday afternoon after lunch break and finish up trading on oil. Again, if there's one day out of the week that is more difficult for oil, it's definitely Wednesday because of that news report smack right in the middle. So as of 10:20, sitting on hands. By 10:40, we're back at it. And again, don't push it over that news report. If you have to, come back in the afternoon and finish up the oil trades in the afternoon. I'll talk more about that tomorrow morning in the trade room, but now you know the big news here for tomorrow. Wednesday is going to be a big one. I have a very good feeling about tomorrow as well. Back to our charts here. S&P, Nasdaq, crude oil. Now, whether you trade one of these markets or you trade all of these markets, I'm going to cover all my favorite trades on each of these charts here tonight. I'm going to go S&P, Nasdaq, crude oil. You'll have a good roadmap by the end of this lesson here tonight. You'll learn something new throughout every section of this video, so make sure you stay all the way to the end because I do give you some incentives. I always try to wrap it together and leave the best stuff towards the end of this video. So don't X off the video after your favorite market. Again, there'll be money-making opportunities, ways to learn new techniques throughout the entire lesson here tonight. All right, so make sure you stick around all the way to the end. Let's jump right in first, though, to the S&P 500. What is the most important factor here on the E-mini S&P? The most important factor here right now is the S&P it looks a bit lost, doesn't it? It kind of looks a bit lost, kind of treading water right in the middle of today's trading range. You can definitely tell there must be a big news event coming tomorrow because, as we saw here earlier, just as we expected, right? We get that deep pullback. The buyers try it once, the buyers try twice, and dumps it back down to retest the low. Now, at this point, we go into a range. The market pops up into another range and then kind of sinks back down here. And I say the market feels lost right now, kind of lost treading water here, because if the market was really that bearish right now, we would have ended up right back down into that range here again. So the fact that we didn't end up back inside that core range right here is a pretty big clue here that, again, the market kind of feels a bit lost. We talked about this in the intro. There are multiple ranges on this chart. Whenever you see multiple ranges, usually that means there's some sort of bigger range that they're trying to flesh out, right? If you were to put a volume profile on this right now, it'll be all the volume here, right? Put a little volume profile on there. And what they'll do is they're going to rotate back and forth and try to fill in all of that volume tomorrow. That's basically how these types of markets are going to work. We know that ranges are magnets, right? So range below acts a magnet, range above acts a magnet. And imagine now the market rotating back and forth inside of one big trading range. Now there definitely is a little bit of a bear tone to it, right? We took out those lows earlier. There definitely is an overall bearish tone to it right now. But we've got to trade this for the most part like a trading range, in a very wide trading range. There's one very important factor about this type of wide range, and that's momentum. And we'll talk about that more as we go here. So it's a pretty simple idea. As we go lower, buyers want to buy off that low. Think of there being a magnet right in the middle of this chart right now. So as the market rolls lower, buyers want to buy it up. Sellers, of course, want to sell the breakout going lower. Get a nice little pendulum swing down there around a major support level at 39.16 and a quarter, right? So buyers want to buy off the low. Buyers want to buy breakouts, right? Going up the highs, back to that prior week close. Buyers want to buy low. Buyers want to buy breakouts, right? Going back up to those highs. What do bears want to do? Oh yeah, bears want to sell off the highs if they can get it tomorrow, and bears want to sell breakouts going lower here. The most important thing is try to stay out of the middle. I think that's going to be the biggest challenge for tomorrow, is messing around with setups right in the middle of this. That's why I said earlier, I don't care how much money you made today. I don't care how well you did today. Tomorrow is one of those days where if you're not paying attention, you could easily get chopped up and give a good chunk of that back. So as we go lower here, we're buying off that low. We're buying that breakout. We're selling right as we go. Let's talk about a couple scenarios here. The NASDAQ is very, very similar to this. So we'll cover a few here. We'll cover some of the NASDAQ. And oil is a little bit different. You'll see why oil's a bit different here as we go deeper into this lesson here right now. Let's talk about, well, first of all, let's talk about breakouts, right? I'm going to talk about buying off the low on the NASDAQ. Okay, we'll talk about that long off the low on the NASDAQ. The NASDAQ is a little bit more likely to bounce off the low. So we'll talk about that one on the NASDAQ. Let's talk about breakouts going lower. Right? Let's talk about some breakouts going lower, and then we'll talk about going higher here once we're done that. Now, breakouts going lower. There are really two types of scenarios that I want you to think about as we go lower. One would be looking for that breakout going lower and finding those hidden channels and finishing off that pendulum swing. Then we oftentimes see these type of situations where it's a big range. It oftentimes will run down, it'll pop up. We can use the underbelly of that range for another leg lower. So we're basically looking for shorts on the way down, taking our profit and then waiting for that bounce and then selling into that bounce, because remember, we know that there's going to be a lot of momentum for the bears. What is support now can be used as resistance. So that's kind of the key that I want you to think about here if we do end up going lower. Again, I will talk about the buy side here a little bit later on in this video. So here's a couple things to keep an eye out. One, let's make sure we take out that low. Two, make sure we pull back and get that jump off the moving average. They have to jump off the moving average. I do not care how strong that initial leg is. They have to hold that pullback. If they can't hold that pullback, the price will get snapped right back up into that range, and I'll talk about how to buy it here a little bit later on in this video. But if the sellers, if they can hold that breakout and get one of those 1, 2, 3 breakout moves, now we can sell this. Now we can mark up that low. We can mark up that high. You know me, I like to drill down, find those traps, grab things like trap setups, grab things like failure setups off the moving average, pullback combinations. And again, we know where the market wants to go, right? We know it wants to take out that pendulum swing and take out that 36.16, 39.16 and a quarter area. Again, wait for that 1, 2, 3 move down, then look for that new channel, hit that trap, hit that failure, hit that pullback combination, quick first target off the low, and then leave that runner to grab that pendulum swing. Now, I know most of you all have taken the free trading course. You've learned about all of these entry setups. You know how to trade traps. You know how to trade failures, when to grab that pullback combination. I get so many emails every week from you guys about how you're using the free class to make money on your own. But hey, if you're here for the first time right now, if you're one of the few folks who haven't taken that free course yet, if you haven't learned all these entry setups, what I'll do is I'll put a little link up here for you in the upper right-hand corner. Grab that link, take the free trading course, learn the strategy, especially learn the setups, the rules, when to take them, when to skip them. If you're like me and you hate missing the best trades each day, that'll give you a roadmap to follow, get you back on track, and get you making money on your own, and hopefully get you ready for trading with us every day in our trade room. So grab that little link that popped up there. You're going to love that free trading course. That way, the next time I say 1, 2, 3 breakout, and grab that first test, you're going to know exactly what setups we're looking for to sell off of that high. Now, at this point now, we get that move lower, right? We get that 1, 2, 3, right? Finish up the move here. We take our profit. Now, profit taking, right? Nice big bounce as we go now. Keep an eye on a bigger channel. Keep an eye on a bigger channel off those lows. Watch those prior support levels as resistance now. And then what will happen a lot of times is those nice deep bounces, what will happen is the buyers will come in, they'll try to buy off that moving average, right? Thinking we're going back up into that trading range, and they might be successful. But if they're not successful at that point now, buyers come in, buyers commit on that pullback. Once they commit, now we know where their stops are. We can use those stops as fuel, right? Basically as gas now to make that run going lower. We can use that failure setup, that pullback combo, and we can retest that low. The goal at this point is to retest that low. Make sense? So again, we get that 1, 2, 3. We're selling on the way down using the high of that new channel. We take our profit at those lows, right? We know this is not just a pendulum swing. It's also a major weekly low. I won't go into detail on when, but big low here at 39.16 and a quarter there. Take our profit, wait for that bounce. Remember, anytime we see a lot of momentum, we know it's almost a guarantee they're going to come back and retest that low again. So wait for the bounce, get up into some larger levels, right? Trap in those buyers. Let those buyers try to swing it back up. They're on the wrong side of momentum though, right? They're on the wrong side of that. It's a breakout now, and we can hit them right where it hurts. Sell right into their stops. Sell right off that first pullback, right? Failure to pullback combination are very common here. I really like that breakdown. Now, I have a few more breakout patterns, but I'll save those for later on in the video. Let's keep this thing moving here, okay? Now you know how to trade this thing as it breaks down, or you know a couple ways to trade this as it breaks down. What if it goes higher here? Remember, I'm not really interested in anything in the middle. Okay, nothing in the middle is very reliable right now. It treads water here. If there was a direction to this, it would have ended the day there. Okay, the fact that it ended right on top of that big round number, right between two ranges, makes no sense whatsoever, and that is the big clue. That is the big reason why we have to be careful inside of this middle. I'll talk about buying off that low here in a moment. As we go higher here, how do I sell it? How do I buy it? Selling it. Well, they both are great opportunities, but as you can see here, I've taken the amount we're below the range, I've projected that above the range. That is resistance, right? That is resistance. Obviously, these big tops up here, these are resistance. Okay, so we definitely know we've got that. What we want to get is, though, we want to get that pop up. We basically want to get up into that 40-60, 40-65 area. And then just like we talked about last night, this is where the fun starts. Now we begin to rope in those buyers. Let them try once. Let them try twice. Once those buyers try twice. Now, why twice? Why twice? Because remember, it's a really big range. And so when it rotates higher like that, there's going to be a lot of momentum, right? There'll be a lot of momentum. When a market runs strong like that, you can't just get aggressive and sell that failure. It's too strong. You got to wait for those buyers, try once, try twice, and then hit them into those stops. Make sense? So as we go higher here, again, it's a range, so I want to sell off the high, but that momentum is really strong. So again, you let them try twice. Let them try once on the pullback, twice on the pullback. Now, all those buyers, right, they're all roped in there now. Where are their stops? Where's their pain, right? Their pain points are right there. Absolutely. Take that order, wait for that signal, and get short right into those stop loss. Now, your job is not over yet, because now, where does the market want to go now? Now the market wants to rotate back down to the other side of this range. This is where things get fun, because now we can go out, find a new channel off that low, find a new channel, or find a new trend line off that low, find a new channel, drill down, and grab that, as we always say, that first test off of that high. Now, of course, I say first test, right? What's the entry pattern going to look like? It'll be a failure setup. It'll be a pullback combo. It'll be a trap setup, hopefully, off of that high. And again, you'll see a lot of examples of what those look like and the rules of that inside that free trading course. That is my favorite trades here for tomorrow, because again, you really get a chance to hit it twice. Grab the reversal off the high and then trade it as it rolls back over off of that high. That is a fantastic trade off of that high here. Now, by now, maybe you're wondering, okay, as we go higher, at what point can I buy this thing? There are probably three breakout patterns. I'm going to cover a few of them later on, though. let's talk two breakout patterns, first of all. One of them we talked about earlier. We mentioned that if we can go up, if we can get these buyers to come in, hold that pullback, and jump, right? Really jump off that moving average. None of this, okay? None of this, okay? This is not a breakout. We go up, we pull in. No. That's the one you sell, right? That's what you sell. As we go higher here, buyers come in. Now, again, if they try a couple times and fail, right? Like back here, try once, try twice. Yeah, it doesn't look good, right? Going to roll over here and tumble back into that range. But if they can hold that pullback and make that nice jump going higher, now you know we have a breakout. Now it's a trending market. Mark that high. Find that low, drill down to your entry time frame. Again, this is a 10,000 tick chart, right? This is not the time frame we're trading with tomorrow, right? Drill down to our entry time frames, our faster time frames. You'll learn about that in that free video course. And we grab that. Again, I love traps. Those are my favorites. Sometimes we don't see a trap. Sometimes it's a failure, right? A pullback combo. We'll take whatever the market gives us off the low of that channel, right? Whatever you do, though, don't miss that first test. Now, where does the market want to go at that point? Oh, it's easy. It's easy. It wants to go up to that previous week's close, last week's close. There's a big, juicy range right there, just begging to get right, just begging to be a magnet for those buyers here. Now, here's one more breakout, and then we'll go over to the Nasdaq here. One more breakout. This one is very possible too. Remember, we had that big move down yesterday. So what if something happens here overnight and we see a short squeeze? Right? What if something happens overnight? What if a Fed speaker says something? You know what I mean? This could easily pop up, but instead of pulling back and going, yeah, the bears may panic on this and the market may start to grind and grind and grind. These could be tricky, right? Because you have a hard time getting pullbacks on these types of moves. So what do you do in these? We call these pop and grind breakouts, right? That pop and that kind of grind. That grind is a short squeeze. That grind comes from all the bears who got short yesterday, right? Those big move down. They're now realizing, oh shoot, I better get out of my positions now. And that causes this market to kind of grind or float or kind of flutter as it goes higher here. That's a very, very big clue. Anytime you see a market that pops and separates and keeps on grinding away from that moving average, that tells you there's a lot of momentum in this case for the buyers here. Now, don't think about big channels. Don't waste your time on big channels. When you see those grinds like that, draw the trend line right up those highs, bring it down off that low. Again, I always go out, I look for prior swings, right? Find some prior swings. I love to get under prior swings for trap setups. I love to get those. That's a horrible drawing right there, Joe. Anyways, you get the point, right? I try to get. Luckily, I'm not an art teacher. I do not teach art. Do not come to me for art classes. But anyways, get under the moving average. Get those bears coming in, right? Remember, if you have this much momentum, what do the buyers want? They want to go back and snap back to retest that high, right? That pop and grind is an easy giveaway. Grab that trap, rope in those bears as they try to short off the moving average and hit them right where it hurts for that retest of that high. Take a good chunk of profit off at that high, at least half the position, and then leave that runner, right? Leave the rest of that position on for that runner up to that last week's close. Or, if you wanted to, really, there's a good chance here if we get into this range here, we might rotate all the way up into that 41.30. But last week's close, though, is definitely going to be an objective here for the buyers. So we talked about the breakout going lower, right? The breakout, the pop and pullback. We talk about selling off the high here and the breakout going higher. Remember, what's the most important thing for tomorrow? Stay the heck out of the middle. Stay out of that middle. The middle is where you're going to lose. The middle is where there isn't enough, right? The buyers are buying down here. The bears are selling up here. We have kind of this little floating area right in the middle. Trade that rotation. Back and forth we go. Let's keep going. S&P's ready to go. How about some Nasdaq here for tomorrow? What's up with the Nasdaq here? What's the most important thing right now on the Nasdaq? The Nasdaq look at it. Look, lower highs, right? Lower highs, higher lows. Remember, the S&P has that bit of a bear tone to it, right? The S&P has that kind of bearishness to it because they actually took out those lows, right? You have some lower lows here. There's a little bearishness to it. The Nasdaq looks a lot more balanced than the S&P does, right? The S&P looks like it could easily roll over and keep going lower tomorrow, right? The Nasdaq doesn't look like it's that easy to get a breakout, at least for the bears. It looks even a little more bullish, right, than the S&P does. So again, higher lows, lower highs, and the giveaway is there are two ranges right at the top and the bottom of that range. So again, imagine the volume profile right now. A lot of volume there, right? They're going to fill in this area right there. Right, they're going to fill this area in probably at some point tomorrow and fill in this whole volume profile right here. If you're kind of a auction market theorist, personally, I don't trade with that stuff. I don't think you need it, to be honest with you. Once you know how to read a chart, you don't need volume profile or auction market theory. I think it's a great foundation to understand how the markets really work. But as far as actually using the value area high, the value area low, the point of control, I personally have never seen anybody make any money with that stuff. I think it looks cool, but I wouldn't go basing your trading decisions on it unless, of course, you like giving money to better traders. Anyways, off my soapbox. It's a range, right? It's a range, right? Range down here, range down here. Trade that rotation. Now, look at where we are, though, on the Nasdaq. Very easy to get a breakout going higher. I think a breakout for the bulls, it looks very easy right now. Again, it has kind of more of a bullish feel to it, right? Lot of open space up top here on the Nasdaq. Look at the bear breakdown, though. Yeah, the bear breakdown doesn't look as easy. Why? Because you get this big low right here, and they still haven't taken that low out yet. If we could easily go back to those lows and go right back up again, and then right below that is the pendulum swing. So we've really got, I'm not saying we can't break out lower, obviously, right? Anything is possible, guys. But the bears have some work to do. They have to really get some strength going lower here, because you have to assume they're going to get bought right back up, right? So very similar here to the S&P. As the market goes lower, what do the buyers want, right? Buyers want to buy breakouts going higher. Buyers want to buy off the low. I like that shit a lot. I like that long off these lows here a lot. That's why we'll talk about that one here tonight on this video. What do the bears want to do? The bears want to sell off the high, right? The bears want to sell off the high for sure. The bears would love to sell a breakdown, but again, that does not seem to be as easy as the other options we have, like on the S&P, right? So how do we buy it? How do we sell it? We haven't talked about the buy off the low. Right, so as we go lower, right, if we go lower, what you want to think about is as we go down. Remember, this will also apply to the S&P 500. Okay, that previous chart, this will also apply to the S&P as well. Now, remember, big range. Okay, big range. What's the most important thing to remember about a big range? It's momentum, right? It's momentum. So when we get a really big move down like this, and we pull back to the moving average, bears once, bears twice, then once those stops get hit, then we let it rip, right? So as we go lower, we don't get too aggressive down here. Again, a lot of momentum. This is exactly where one of my favorite trades sets up here, right? Those two try failures into rotation. Bears try once, bears try twice, getting the pull back to the moving average, bears once, bears twice. Where are their stops, right? Where are their stops? Where is their pain? Okay, where is their exit? Put yourself in the shoes of those bears. Think about Think about if you were a seller, where your exit would be. I like to go in, draw a trend line off those lows, right? Look for some additional support there. Nice signal candle coming off that trend line. There's your failure. And then remember, as we go higher here now, draw that new channel. Find that new, right, the trend line, find the new channel, drill down to your faster time frame, right? Grab that trap, that failure, that pullback combo, and then where's the objective? Oh, yes, they want to go back up and retest the high. Now, remember, you want to get in as close to these lows as you can, right? As close to them as you can. So don't be going and chasing the thing, right? Don't be getting that failure down here, having to go running higher, right? And then going in and trying to chase after it, right? And buy that pullback right there. That is a pullback that's more likely to fail, right? It's more likely to fail. Why? Because you're at the top of the range now. Buy low, don't buy high. This is why I said if you're not mentally ready for this tomorrow, it could be a bloodbath tomorrow. Give back all those gains from selling off these highs. So be very careful with those longs into those highs. Okay, so as we go lower, we'll look at that buy off the low here. I would also say too, right? If we really take out that low, all right. Let's say, for example, we really take that low out, right? They really slam down and take out that low. If it's a really strong move down, right? If it's a really strong move down, oftentimes the better way to take that reversal is to wait for a retest. Because remember, anytime we see a strong move in one direction, they're going to want to retest that low. Wait for the retest, then look for 2 tries and go from there. So just be aware of that on these lows. You know, if it kind of dribbles its way lower, right? Yeah, 1, 2, back up we go. But if this thing just screams lower, takes out that low, which is very possible with these markets right now, if it really pushes and really runs like that, the best way to do it is wait for that retest and then go out and then go 1, 2, buy into those stops from there. So be aware the strength of that move down is a really important part of this. Now, if we go lower, if we can take out that low and get one of those little pop and grinds, well, now that's a different story, right? If we can get a little pop and grind, that pop and grind is very telling. It's very important. Pop and grinds almost always will pull back, grab that bigger channel, find those traps, get above those prior swings, and again, that will almost always put us above the moving average. I purposely draw my channels backwards ultimately, right? Purposely draw those channels so when I do get the pullback, I'm above the moving average. And that way, I can try to trap in those buyers who are trying to buy it back up into that range. Trap those buyers in with a failure setup and hit it for a retest of that low. Now, think about this as we go lower. Is there a possibility here we may see a short off top of that channel? They may take their profit, and then the bears may go 1, 2, and then whoop, right back into that range? Absolutely. In fact, if there's a trading god listening out there right now, please, this will be great tomorrow, right? This will be great. So again, think about it, right? Think about it. Strong move down, right? Strong move down. Pullback, blast, right? Real big blast off that moving average. It clearly breaks out of the range. All of that momentum now says, okay, I can trust selling that pullback. Again, with the right entry setup, obviously, right? The traps, the failures, those are what give you that edge that you need to trap in the other side of the market and use their stops as fuel. Hopefully that makes sense. Now, it's very feasible to think we get that short off the low or off the high. They then retest that low, and then here we go again, right? Now we've got the bears coming in. They're trying once. They're trying twice. They're selling right into the pendulum swing, right into that big range. Tons of magnet, right? 2 ranges above us. Big range, big magnet above us. Stops are sitting right below or right above that high, and then we hit those stops for a failure, and then back up, grab that new channel, and then grab that, right? Grab that first test as we go. Right? Now, that is a very realistic possibility for tomorrow. Now you have a game plan for it as we go. If that makes sense, hit that like button for me. And while you're down there, leave me a comment. Let me know what your favorite part of this video is. I want to keep doing more of what you guys love to keep you guys getting better every day on this video newsletter. So as we go lower, very possible for a breakout. We can trade that breakout, but then keep in mind that double bottom and then rope in those bears and hit them, again, right back possibly into that trading range. This could easily be a double dip as we go lower. Now, as we go higher here, remember, priority number 1, stay out of the middle. All right? Setups are not going to hold up. Stay out of the middle here. As we go higher, right? As we go higher here, this is the same exact thing as before. As we go higher, look for those 1, look for those 2, right? Find those stops and grab that short coming back down. Grab that channel. Again, you want these entries to be as high up the ladder as you can. Okay? If this entry is way down here, I'm not taking that trade. Okay? Remember, you want to sell as high as you can up around the high of that range. If you miss it, you miss it. It's worth missing it than losing money. I'd rather have, what's the old saying? The old saying is, I'd rather be on the sidelines wishing I was in than being in something where I wish I was out. You know, that's kind of the way it goes. So be selective with those trades as it rotates off that high. And if you don't know what I mean by that, it is a very good sign. Take that free class. You'll learn the basics and then come out and join us and do it with me. I'll make sure you know what the safe stuff is, what the good stuff is every day at the opening bell. A breakout pattern. Again, easy breakout here, right? Easy breakout. All you do is poke these highs here. Last week's close is a big magnet. Remember, Wednesday, Thursday, and Fridays, we start to look now back at last week's close. The further we get this week, the more last week's close becomes a very juicy target for those buyers. We pop up. The buyers hold that pullback. They jump off that moving average, right? Not just, not something like this, not something like that. They jump, right? They jump. They pop right to that high. I know it's frustrating, right? Because nobody likes to miss that pullback. Trust me, I hate missing good trades too, but that's not a good trade. It's not a reliable trade. That is a 30-70 trade right there. I am not in the business of taking 30% trades. Neither should you be. All right? You'll be out of the business pretty soon if you take 30% trades. Avoid that one. Wait for the proof. Wait for that jump. Once that jump is there, this trade right here is probably an 85-15 trade right here. This is probably an 85-15 trade. So it's your choice, right? It's your choice. Take the 30-70 trade here, or take the 85-15. It might even be 90. It might be 90-10, right? Which one do you want? Which one do you want? Which one do you think is going to keep your career growing or your account growing, right? You know the answer to this one, right? So wait for that 1, 2, 3, and then grab that, right? Grab that first pullback or that pop and that grind. Again, the pop and grind is very realistic for tomorrow because that big move down that we saw yesterday. Mark off those highs. Do not go for a big channel. I know it seems like a good idea, but those big channels are going to waste your time. That pop and grind is again, the grind is the giveaway. The grind is the giveaway. Those are not buyers buying up there. Those are sellers getting out of their positions. Okay, that's why it grinds like that. And so once the buyers get a chance, they're going to hit that thing, right? They're going to grab those traps. They're going to grab those failures, and they're going to buy that first pullback. Now, a good target on this, the first leg and the third leg. Okay, whenever we have a pop and grind or a 1, 2, 3 breakout, first leg, third leg. Those are always kind of good targets there. One more here. How about a 2-try breakout? Okay, again, all of these will also apply to the S&P as well. How about a 2-try breakout? I'm not a big fan down here. I'm not a big fan of the 2-try breakout down here because we got too much support down here. But I like the 2-try breakout overhead. What's the 2-try breakout? Repeat after me. Strong move up, shallow pullback, shallow pullback, higher high in price, traps, baby. Strong move up, shallow pullback, higher high in price, trap. Right below that low. This is very feasible because we have all that space overhead. And again, the Nasdaq seems like it's got a little more of it's a little more balanced right now. It's not as bearish as the S&P is. And again, if we can crack above this high here, there is plenty of wide open blue skies, baby, all up, right? All the way up there to that range we have waiting above us. So again, strong move up, like really strong rip, right? Strong move up. Look, right here. Okay, this is what it looks like right there, right? Anytime we see a strong move up, shallow pullback, higher high in price, you better be ready for that trap, right? That's a fantastic trap setup. Now, you'll notice if you get a lower high in price, no trap, okay? Lower high in price, no trap, okay? It's a very specific setup, and boy, does it work well. Strong run up. Remember, real strong, shallow pullback, higher high in price. The shallow pullback is what gets it going. The shallow pullback is what drives the buyers crazy because they want to get into that move. The higher high confirms it's not just a V-top, right? Because a lot of times they'll go up and come right back down again. Okay, the higher high is really important too because the higher high confirms now everybody's parking their orders right below that low, right? 2-try breakout. I'm not a huge fan of that trade right here though. You know why? Because we got a lot of support down here. Right, just be aware of that. Anything's possible as long as we have enough strength going to that low. All right, I think we did a pretty good job in the Nasdaq here. What's your number one priority tomorrow? Stay the heck out of the middle of this trading range. Trade the edges. Trade the edges. Rope in those breakout traders and trade the edges. Let's keep going here over on the crude oil. We'll save the good stuff here for last year tonight. What is up with the oil? Well, as you can see here, oil kind of began the day here in a range. And then it kind of slunk lower, right? Kind of grinds lower here into a new range. We had talked about this last night briefly. I kind of mentioned last night, I wouldn't be surprised today if we wound up kind of grinding down into that big psychological level, right? $100 a barrel, very psychological level. What is the most important factor in this chart right now? We're definitely bearish. We're certainly not bullish, right? That's good news for all of us at the gas station right now, the pump station, the petrol station, depending on where you're watching this video right now. So we have the most important thing is that we are bearish into a range, right? We are bearish into a range with a range above us. Now, this is a very different scenario than way before. Before we had range here, and the market kind of rotates back and forth. This is basically a range market that breaks out into another range. And a lot of times what will happen is we can then use that previous range as a level of resistance, basically, right? So we have a bear market into a range. This range is the magnet, okay? Yeah, I know this is a range here, but what I always tell my students is, I know it's kind of confusing, but recency is really important. So anytime we have a new range, the new range 90% of the time is the new magnet. All right. I say 90% of the time because you will see exceptions to that rule. Every once in a while, it'll go into a new range and then back to the old range. But the vast majority of the time, whenever we see two ranges, the most recent range, right, the one that's breaking out, the breakout range, that's the one you want to pay attention to. So if we have a bear market right now into a trading range, how do you trade that? You find levels of resistance. I love this trend line. I love how that trend line lines right up with that hidden channel. See that? Draw the channel off the lows, up around that high. I mean, come on. This is a beautiful spot. Look at that spot right there. Little traps up there and everything. Use the range as a resistance area. So you have to think the bears would love to get short as we go. At the same time, though, you would also imagine, too, if this was to get a little bit more out of hand here for the bulls, they may snap this thing and run this thing all the way back up to retest those highs. Most important factor is this new range. We'll try to use the resistance levels above us to sell short here. Bears, what do the bears want right now? Yeah, the bears want to sell off this high. Easy. The bears want to sell a breakdown going lower, right? There is nothing but wide open space there down to 95, right? 95.17, 95.29 is technically the big support level down there. 95, even though, is the next big round number. 105, 100, 95 as we go lower. What do buyers want to do right now? Buyers want to buy off that low, right? Buy that double bottom reversal. Buyers would also like to buy the rotation. And we'll talk about what that rotation might look like here in a moment. The key is going to be taking out that low first to be a buyer here as we go. All right, let's talk about up, down, sideways, and we'll get you guys off to the rest of your evening here. As we go higher, I want to sell, right? I want to sell. My biggest concern, though, is that we still have this big range. You know, like I said, we 90% of the time, this new range is the new magnet. But again, I do want to make sure I account for those buyers here who will try to come and push this thing back into that range. This is a great example where you want to let those buyers try twice, right? With that range above us, you know, there's a good chance that this might act as some support. You know, what was resistance becomes support, vice versa. So I do want to see those buyers try once, try twice. Where are those stops? Hit those stops with a 2-try failure. And again, grab that low, find that channel, get that first test is the best test. Again, 2-try failure, grab that trap, that failure, that pullback combo off of that high. Where's my target? Back down to retest the low. Right? I like that a lot. Now, how about a break going higher here? As we go higher, how do we buy it? As we go higher, well, here's the thing. We're going to have to go up. We're going to have to hold this pullback. We're going to have to jump off that moving average. And we've got to grab that first test before we retest that high. Okay? This is where we got to thread the needle a little bit. Right? So you want to see that move up. Grab that reversal. Grab that first test. Targets, of course, up here. Now, don't be surprised here if we see something like this, pops up, pulls back, jumps up, we grab our channel, we get that long off that channel low, we take out that high, and then you guessed it, 1 try, 2 try, stops are hit, and we're back down into that trading range again. That is a very, very likely scenario here for both sides of that market. You know, again, you can make money trading that breakout pullback or that 1, 2, 3 reversal. And then again, watch those highs up here. Watch those buyers try a couple times. Once that market starts to stall out, buyers keep trying twice. Stops are sitting right below that low. Hit them off that failure and then grab that first test as we roll back down into that trading range. Probably be back down to retest those lows, right? If this continues going higher, then obviously from there we're going to break out going higher here, right? If we do end up getting up around these highs here, get that breakout, right? Get that 1, 2, 3. You know, if they pull back and they keep on going, right? If they blast and push through that 104.17 area, what you'll want to do is scrap this channel. Okay, that channel's gone. Not gone, but I like to use the first test each time. Right? So think about each channel is almost brand new every time. You know, they're like single serving channels. You know, once you hit them, they're done. So as we go higher, if we do end up going higher here, up into those highs here again, it's literally the same technique, just new channel. Right? As it pulls and jumps, find a new channel here now. Okay? So don't waste your time on the old channel. Right? That's the old channel there. Right? That one's done. That one's used up. Okay, all the good stuff, all the juice has been squeezed off that first channel. Find that new channel now, and now we go higher from there, right? Where's the next objective from there? Well, 106.5 here, that's that big, right? Yeah, see, that's that big low that we still haven't gone back to test yet. So 106.43, I would imagine that's where these buyers want to get to if they can get this thing to push up like that. It doesn't seem likely right now, but who knows? Who knows? Again, my job tonight is to plan my trades, and then that way I have a game plan. I can trade that game plan here tomorrow. As we go lower, one of my favorite trades here right now, strong move down, retest that low. I really like this one where we've got the 2 try, right? That failure. And then if they fail and snap back up, I really like that first test pullback right here. I like that first test pullback here. Again, it's a simple 2 try failure. They retest that low, basically a double bottom reversal. Let those bears try once, try twice. Nothing new here. But then again, grab that new channel. I like that long right there a lot. Because what happens oftentimes is the market will make a little low and then snap right back up in the opposite direction, right? Trap in all those breakout traders and then snap going right back up. And so I like the idea. I like the idea of the failure. What I really like, though, is as it turns over, grabbing that first pullback and that run back up into that trading range. All right? Don't worry about this channel here at that point. That channel's not going to stand a chance. All right? If that happens. All right, I like that long off of those lows, but maybe we go lower, right? Maybe we go lower here. Next objective again is at 95. Plenty of space here, right? Pop and grind, going lower, mark that low, mark that high, grab that trap, grab that failure, nothing new there, right? Maybe it breaks down, holds the pullback, and jumps. 1, 2, 3 breakout, mark that low, find that channel, hit that first test. Okay, makes sense. Or maybe it's a strong move down, real strong, shallow pullback, shallow pullback, lower low in price. It's late, busy day today. Traps, baby, right? That's another great trade too. Again, these are almost guaranteed winners. They're very, very reliable, like right here, right? They're everywhere, right? Strong move down, shallow pullback, lower low. Surprise, surprise. Any surprise people are selling that? No, it's a very good setup, right? It's a great setup. So look for that down here. Strong move though, right? Real strong move. That's the key. Got to be some juice behind that move as we go. And remember, we got 1 range, 2 range. Don't be surprised here if it takes off the downside into a new trading range down here. What do? You find levels of resistance and you trap in those buyers. You wait for the breakout, wait for that breakout failure, right? And hit them. Basically, it's the same thing up here, right? But down here. Make sense? All right, I've taken up too much of your time tonight. Got a pretty good game plan for tomorrow. Remember, plan your trades, then trade your plan. It makes it so much easier that way. We're not in the prediction business. Okay, we are in the reaction business. Remember, tomorrow, 8:30 Eastern time, we've got potential for a pretty big reaction process tomorrow. By 8:40, we may have a completely different market on our hands tomorrow. So be there tomorrow morning, 8 o'clock Eastern time, in our trade room. If you're looking for a great place to learn and trade along, our trade room is designed for new traders trying to get on track, make some money, or experienced traders. I'll tell you right now, if you have a couple of years of experience under your belt, all you need is just to get the right pieces in the right situation. You know, one of the cool things about trading is it's a lot like opening up a combination lock. You know, you can't just know the numbers. You got to know the sequence of those numbers. So I'll be able to help you out, put those sequence together, open that lock up, and start to really make the most of your trading like I know most of us want to. All right, guys, have a great rest of your evening. Thank you so much for watching all the way to the end. Hope you liked the video. Make sure you subscribe. Again, any questions, hit me up in the comment section below. I'll put all the free course links, all the membership links, everything down below in the description. And that's it for now, guys. Now get some rest out there. Get some rest out there. Big day for tomorrow. Looking forward to seeing you guys tomorrow morning at the opening bell in the trade room, 8 o'clock Eastern time. My name is Joseph. Be well out there. Be nice to each other, will ya? And you better be here next time. All right? Adios, amigos. Bye-bye for now.